Most traders are flying blind. This is your seatbelt and your cockpit and the exact plan to land your profit every time. By the end of this video, you'll walk away with the clearest beginner trading plan on the internet. No fluff, just a step-by-step system that actually works. So let's go. Step 1, define your trading goals. Here's a wild stat most people don't know. Over 70% of new traders lose money. Not because they're dumb, not because the market is rigged, but because they have no target. They have no structure and there's no plan. Saying, I want to make money is like walking into a gym and saying, I want to get fit. Cool. How? By when? What's your plan? If you can't answer that, you're not trading, you're guessing. This is where we build your target. If you're just getting started, forget the Lamborghini dream, focus on something clear, simple, and real, like grow my account by 5% a month or make an extra $1,000 by the end of the year. Those are goals that keep you grounded when the market gets crazy because you're chasing clarity, not fantasy. You make smarter trades. But profit isn't the only goal. One of my favorite goals, follow my trading plan for 20 straight trades with no emotion. That's the one that changed everything for me. You can also set goals like only trade during London session or study 2 new setups in the next 30 days. It's not about doing everything, it's about doing your thing on purpose. And here's the real cheat code. Write your goal down, read it before you trade. It's the only thing that keeps you from chasing random setups you saw on Instagram. A good goal is smart, specific, measurable, achievable, relevant, and time-bound. Instead of saying, I want to get rich, say, I want to grow my $500 account by 2% a week over the next 6 months. That's how you move from hope to execution. That's how real traders grow. Right now, in your head, what's your goal? Not just to win, but to win with structure. Because without that, the market will eat you alive. Write it down, lock it in, and then let's move to the next step. Step 2, choose your trading style and schedule. 71% of new traders quit within the first year. Not because they're dumb, but because they jump into a strategy that doesn't fit their lifestyle. Trading isn't about copying someone else's pace. It's about finding what works for you. You need a strategy that matches your personality, your job, and your routine. There are 4 major trading styles. Number 1, scalping. Number 2, day trading. Number 3, swing trading. And number 4, position trading. Each one demands different times, focus, and patience. So let's break them down. Scalping, that's rapid fire. You're in and out in seconds or even minutes, trying to catch tiny moves. But it requires intense focus and constant screen time. That's not for faint of heart. Day trading, you open and close trades within the same day. Still fast paced, but a little more flexible than scalping. It works well if you have 3 to 5 hours of dedicated time daily, especially during high volume sessions like London or New York. Swing trading, this is where most beginners should start, in my opinion. You hold trades for several days, sometimes a week or even 2. It gives you time to think, time to plan, and time to breathe. Perfect if you work a job or only have evenings free. Then there's position trading. This is long term. Think months, even years. It's more like investing. You're not chasing pips, you're betting on global trends. So ask yourself, can you sit in front of a screen for hours a day? Or are you only available at night after work? Can you make fast decisions? Or do you like to plan and wait? Once you know your style, you need to lock in your trading schedule. Don't just say, I'll trade whenever. That's lazy. Pick a session, mark a time block, and stick to it. London, New York overlap is 8 a.m. to 12 p.m. Eastern. It's where the most volume happens. If you can't trade then, go for an end of day setup using the 4-hour or the daily chart. Just don't trade randomly. Your plan might look like this. I'm a swing trader. I analyze the markets every night at 8 p.m. I only take trades during the London session. Write it down, commit to it, because the fastest way to fail in this game is to try and do everything. Step 3, choose your currency pairs. What to trade. Next up, what do you actually trade? In Forex, there are over 60 currency pairs. You only need 2. New traders try to watch 15 pairs and end up learning none. Your goal isn't to see everything. It's to know how 1 or 2 pairs behave better than anyone. Start with the majors. Euro USD, GBP USD, USD JPY. These pairs have tight spreads, high liquidity, and tons of education available online. They move clean. They're easier to read. They don't spike out of nowhere like exotic pairs. Stick to majors for the first 6 to 12 months, And if you want to go deeper, maybe add a commodity pair like AUD/USD. But don't stretch yourself thin. Each pair has its own personality. Some move slow and steady, others are aggressive and choppy. But you won't understand that until you watch them every day. Your plan might say, I only trade EUR/USD and GBP/USD. I only enter trades during the London session. I only take trades that follow my system. Why does this matter? Because you don't want to get pulled into a pair you've never studied just because someone on YouTube said it looks good. Stick to your sandbox. Master 2 pairs before you even think about adding more. Trust me, you'll see more opportunities by narrowing your focus than by chasing everything that moves. This game isn't about speed, it's about precision. Choosing your style, your schedule, and your pairs is how you sharpen the blade. Now let's talk about how to actually place your first trade the right way. Step 4, define your trading strategy, entries and exit. Here's where most beginners mess it up. Strategy. Not the idea of a strategy, the execution. They hear YouTubers say, just buy the breakout and think that's a plan. It's not. A real trading strategy has rules. It's clear, repeatable, it's mechanical. And if your entry isn't written down like a recipe, you're not trading, you're guessing. Let me give you an example of a clean entry rule. I buy when price is above the 200 moving average, RSI is below the 30, and we bounce off a support zone. Simple, direct, no feelings, and if all 3 things aren't true, there's no trade. You walk away. That's the game. You're not checking setups, you're waiting for your checklist to be met. And the checklist, that's your edge. Because without it, you'll end up entering late or exiting early and wondering why nothing sticks. Same goes for exits. If you don't know when to get out, the market will make the decision for you, and it won't be pretty. Every trader needs a take profit and a stop loss. Before you hit that buy button, you need to know exactly where you'll take gains and where you'll cut your losses. Think of it like this. If price hits X, I get out with a win. If price hits Y, I take a loss and I move on. A good take profit might be a previous resistance level. A clean stop loss might be 20 pips under a major support. Make sure both decisions are based on what the chart is telling you, not your emotions in the heat of the moment. Some people use just technical indicators like moving averages, RSI, MACD. Others watch fundamental events like news, interest rate announcements, or NFP Fridays. You can use both, just be consistent. For example, maybe your plan says you don't trade 30 minutes before or after major news. That's smart. That's strategic, and it belongs in your plan. Write it down, not in your head, not on a napkin, in your trading plan. And if your entry and exit rules aren't written clearly, they don't exist. And if they don't exist, you're one bad trade away from blowing your account. Step 5, set your risk and money management rules. This is where the winners and losers separate. Risk management isn't sexy, but it's what keeps you alive when the market punches you in the mouth. First, never risk more than 1% of your account on a single trade. That means if you got $500, your max risk per trade is $5. Sounds small, but that's how pros stay in the game long enough to stack consistent wins. Second, use a stop loss, always. No exceptions. Place it at a logical level, like just beyond the most recent swing high or low. If you're buying at support, put your stop loss just below that level. If you're selling at resistance, set your stop above it. Stop should make sense based on structure, not what you're feeling. Third, know your risk to reward ratio. This is how much you're trying to make versus what you're risking. If you risk $50, you want to make at least 100 or 150. That's a 1-to-2 or a 1-to-3 ratio. Why does this matter? Because you don't have to win every trade, you just have to win right. Even if you only win 4 out of 10 trades, a solid risk to reward ratio keeps you profitable. Now, let's talk position sizing. This is how big your trade actually is. You can use a free calculator. Just type in your account size and how much you're risking and your stop loss and pips. It'll tell you exactly how many lots or micro lots to enter with. Don't eyeball this, don't guess. Sizing too big is how beginners blow up on one trade. Last rule, set your weekly risk cap. For example, if you lose 3 trades in a row or drop 5% of your account in a week, step back, stop, review, take a deep breath. No revenge trading, no chasing those losses. Your job is to stay in the game long enough to hit the next A+ setup. If you only remember one thing from this video, remember this: you don't need a perfect win rate, you just need rules. And when your trading plan has a clear strategy and real risk control, you stop hoping and you start executing. Step 6, build your trading routine. Your trading plan is only as good as your daily routine. This is where good habits will make you money and bad ones will cost you everything. Most traders lose not because their strategy is bad, but because their routine is lazy. So let's build one that keeps you sharp. Start every day with a simple check, the economic calendar. Go to a site like Forex Factory or MyFXBook and look at the major news events coming out that day. Interest rates, decisions, job reports, CPI numbers, those are landmines if you don't plan around them. So your routine might say, check the calendar every morning and avoid trading during high impact events. Next, mark your charts. Choose a time that works for you. Maybe it's 6:30 a.m. before work, maybe it's 8 p.m. when the house is quiet. Open TradingView, load up your pair, and mark the key levels: support, resistance, trend lines, supply and demand zones. Whatever tools you use them the same way every day. You're building a checklist for your brain. That's how you trade with consistency. Personally, I check 2 things every session. Is a price trending or ranging? Are we bouncing off a key level or breaking through one? That alone tells me if it's worth trading or if I need to sit on my hands. Then comes the most underrated tool in Forex, your journal. If you don't log your trades, you're trading blind. Every single trade you take needs to be written down: your entry, your exit, the win or the loss, why you entered, what you felt. If you felt confident, note it. If you felt rushed or unsure, note that too. This is exactly why we created Market Memo, because it's the #1 tool every trader should have. The journal isn't for bragging, it's your mirror, and it shows you what you're doing right and where you're messing up. At the end of each week, review your trades, not just the outcome, but the patterns. Did you lose money every time you traded on a Friday afternoon? Did you win more trades when you waited for 3 confluence setups? These are clues, and they're gonna make you better fast. Don't overcomplicate it. Your routine can be 5 bullets long. Check the news, mark my charts, wait for my setup, take the trade, log into my journal. That's all you need to start trading like a professional. Step 7, test and refine your plan. This last step separates the dreamers from the doers. You don't build a plan and go live on Monday. You test it first. Start with back testing. Scroll back on TradingView. Find a spot where your strategy would have told you to buy or sell. You mark it, play it forward, and then see what would have happened. No emotions, just data. Do that for 20, 30, 50 trades. Track the results. And if you're winning more than you're losing, if your average win is bigger than your average loss, that's a green light. If not, then you know to tweak something. Maybe your stop is too tight. Maybe your entries are too early. Refine it until it works on paper. Then comes forward testing. That's when you run the plan on a demo account in real time. It's not live money, but it's live action. And that means it tests your mindset. Can you stick to the plan when the market's moving fast? Can you wait for your setup? If not, you're not ready yet. But if you can, you're getting close. Do this for a few weeks. Don't rush it, don't fake it. If the plan doesn't work in demo, it won't work live. Now here's the key part most people skip. Your trading plan is never finished. It's a living, breathing document. You grow, it grows. The market shifts, you adjust. Every month, look at your journal, what worked and what didn't. Update 1 rule at a time, test again, and then repeat. That's how your plan evolves from good to dangerous. Most beginners spend their time looking for the secret strategy, but this right here, this process, plan, test, refine, is what actually prints results. So stop looking for shortcuts and start building something that lasts. Look at what you built. You didn't just watch a video, you built a trading machine, one that sets goals, protects your capitals, times entries, controls your emotions, and adapts as you grow. You got clear targets. You got a style that fits your life. You've locked in your pairs, you've defined your setups, you've got a daily routine, a journal to track every move, and a system to review and improve. You don't need a signal group, you don't need to gamble, you got structure, you got discipline, and that means you've got control. Most beginners lose because they wing it. You won't. Because from now on, every trade you place has a purpose and every mistake you make has a plan to fix it. So if you got value from this video, please hit that subscribe button and I'll see you guys in the next one. Love y'all. Peace.